Hi everyone, and welcome back to today's Morning Report Trust Appraisal videos on Thursday the 4th of August with me, Richard Pro Market Analyst at Antip Markets. We're going to look at cable now, and it is Super Thursday for the Bank of England, and we're expecting a rate cut, and it'll be at 12 o'clock today, so I expect a lot of volatility around that point. In terms of the technicals in front of the decision, you saw that strong candle on Tuesday, slightly corrective move yesterday, and again slightly corrective again today, sort of 30-40 ticks down so far. I think ultimately the market is expecting a rate cut, so I think it depends on exactly how dovish the Bank of England rhetoric is, whether it talks about further quantitative easing, whether it talks about a sort of series of rate cuts or measures to help to ease monetary policy. So if the market just gets a rate cut on its own and doesn't talk about anything else, then perhaps there could be a bit of disappointment and we could see a bit of a pop to the upside. But ultimately, I still think that there is further downside in sterling. Now, technically speaking, the breakout above sort of 32.80 to sort of 33 was quite a solid move, and it's actually finding support again around 32.80 today. Oh no, let's do that a bit better. Finding support around that sort of 32.80 mark, which is interesting. So that sort of breakout level is holding for now, and we've got sort of still positive configuration on RSI on the hourly with that 32.80 level holding. MACD line's just retreated back towards support. So basically, on a technical basis, 32.80 is a bit of a fairly pivotal level actually. When you look at all this, so a breakdown below 32.80 would not only complete a top pattern, sort of triple top, I suppose you'd call it, at which point you'd then sort of measure the height of the top, 33.70, so that's what, 90 ticks downside. 31.90 would be your technical downside target initially. But if the Bank of England is fairly dovish in its rhetoric, then I think you could see probably further drop towards 31.60, and possibly in the next few days 30.60 being the key low. But obviously, market is pretty much waiting for this Bank of England decision now, and I'll be surprised if you get any sort of real move in front of that below 32.80, because that is clearly a bit of a near-term floor. 34.80 is the reaction high that we saw mid-July. 34.80, and that sort of protects 35.35, which is the sort of resistance here. And if you broke above 35.35, that would complete a head and shoulders reversal pattern actually. We're not close to that yet. Obviously that's 250 ticks away, so you can't really talk about that quite yet. But certainly if the Bank of England disappoints, I mean, say for example it didn't do a rate cut, which is highly unlikely, considering the fact that the Bank of England's previously said that most participants were looking to loosen monetary policy through, during the summer, and August was a prime month for that, being the Super Thursday, with the quarterly inflation report and also the Bank of England meeting minutes all in one big bundle of monetary policy. I think the likelihood is we're going to get a rate cut today, and the market is pretty much pricing that as we speak. So I wish you good luck in your trading on cable today. Could be a volatile one, and I'll speak to you later. Thank you.